Hello, traders. This is Michael coming to you from GammaEdge on Monday, May 19th with our pre-market strategy and briefing session. As always here at GammaEdge, we start with our three pillars: sentiment, structure, and trend. Currently looking at our market trend model that is based on the tick index. You can research that at your favorite investing website. But the quick takeaway for the tick index is it is buying versus selling. And then we look for who is winning the overall battle of buyers versus sellers. This is our bolded white CT here. This is our cumulative tick, indicating that buyers were in control overall for the past week. And then heading into Friday, if we're going from lower left to upper right, then obviously buying is maintaining the overall control. And if you're from upper left to lower right, then sellers are in control of the overall environment. The color driven is our longer term look back period. If the red is above cyan, then the longer term overall trend is up. And the market participants are buying more versus more than they are selling. Our new highs versus new lows breadth indicator here for the past week really has been showing nice strength in the overall market as more stocks are being accumulated or bought being versus sold via the green line and the red line. This blue cyan line here is our filtered cumulative tick that's filtered out from plus 1,000, minus 1,000. Those are just larger block orders by larger participants within the overall market. This would be institutions or, again, larger market players. And again, we saw on Friday that it was above the zero line and accumulating to the upside. So obviously significant orders were coming in on the institutional side. And you'll see that over the past week, we really only had one day where we were below zero. But then strong days the rest of the week. And then our cumulative tick here, as long as it's above the zero line, that indicates that more buying is occurring versus selling. So heading into today, obviously, we're looking at a gap down in overall price. Could we see some sort of consolidation or pullback like we saw in the previous week for the market trend model? Absolutely. So that's what we'll continue to watch. Heading into the open, we'll watching this bolded CT to see if it starts to flatten out or roll over below these moving averages that we use for a trend and overall look at the market. So again, we'll watch this day over day, but coming into today, it is extremely bullish. So far, and that this may just be a short-term pullback with a longer-term uptrend or a bull look of the market trend model. So heading into the SPXA, this is our cruise ship. Obviously, these are the larger expiries on out in time. This is institutional positioning and larger market participants. So we've had we're past OPEX now, so we're heading into our June expiry, and then we have all expiries turned on here just to get a overall 40,000 foot view of larger institution positioning. Call dominated above and below spot price, nothing to really change there. You can look up and down the net delta column. Obviously, this is spot price sensitive, but it is extremely green, indicating that call speculators are maintaining overall control of the market. And then the net OI, which is not spot price sensitive, up and down the overall chain is call dominated above and below spot price. Our eye gets drawn to the 6,000 level pretty quickly. That's one of the largest strikes, obviously, to the upside that we'd be looking for if price starts to appreciate there. And then obviously we do have 6,100 to the upside also, and 6,050 that continues to get out of the money call speculation from larger market participants. To the downside, we know 5,900 is a key level. That was a key level for the past few weeks to get above and stay above. Looks like we might open below that, so that will most likely be an overall headwind, but do recall that these are larger, longer term expiries, so they're not going to exert as much force on the intraday or weekly overall price action. So again, just keep those levels of note on your trading plan. And we'll head on to the SPXP, which is our speedboat. This is obviously contracts that turn over much more quickly. These are our 0 DTE daily expiries as well as weekly expiries. Call dominated here on the gamma condition. So that indicates that call speculators are in control above and below spot prices. You can note by the green net delta here, and then the net OI here. And then we do have net OI down here that is obviously red, but over here on the net delta, these are in the money calls that will be supportive as long as we stay above those with spot price. Looks like we'll be implied open will be around 58.85 to 58.90. So key takeaway is we'll be below the transition levels as we head into the open. These could be an overall headwind or a ceiling to the upside. We may come up here with spot price and then see some sort of rejection of the transitions, or we may move through the transitions and that moves us into a little bit more positive gamma call dominated state. And then we'd be looking for price appreciation towards 59.50. And then obviously our eye is drawn to the PGEX level and COI at 6,000, which would be that larger target to the upside. So key takeaway is, well, we may be opening below transitions. We're still call dominated within the overall structure. So again, this could just be a pullback within an overall bullish uptrend, but we'll continue to monitor this day over day. Heading into the SPXP, again, key takeaway, a single day expiry. We're call dominated above and below spot price. OI is a little bit less today, as we normally see for a Monday, usually a 3,000 or 300,000 to 400,000 for a Monday. So we'll watch the liquidity as we move through the overall structure today. Key takeaway again here is we'll probably be opening below transitions, which would be GEX and DEX transition. The overall structure is pretty noisy. So 6,000 obviously to the upside, our eye is drawn to that. And then this transition area at 59.75, 59.80. Then our DEX transition, which is the confluence of the previous SPXP at 59.25 and 59.30. So if we open down below here, obviously the bottom of the drunken sailor range, if price comes up here and we see some sort of rejection, this may be an opportunity to short for a move back down. Somewhere around our expected move at 58.60 or 58.75, somewhere around in there. If we do get above transition, again, remember we'll start to move in a little bit more positive gamma call dominated state. And then we look for price appreciation up towards this 59.50 level, which obviously is just a round number. Decent amount of net delta and OI sitting at that level. Above 59.50, we'd anticipate transition up here at 59.75 and 59.80. But overall, remembering that we're within the overall drunken sailor range, so we could have some extreme volatility and choppiness within this overall range. So we prefer obviously to trade on the edges and have a better risk reward trade. So those trades would be obviously above DS for a move up, or below DS for a move down, or around the transition areas, those key gamma delta levels. Vol-M will be the key deciding factor today. Obviously, our Vol-M command indicates the intraday volume, the mass of contracts is being traded by market participants via the SPX options volume. So we'll continue to watch that. Again, if the volume is trending up, then we would anticipate that we'll see some sort of price appreciation. And if volume is trending down, then obviously we'd see some sort of price depreciation, or we may see a consolidation day within this overall drunken sailor range. And since we have such a noisy structure, we may be trapped obviously between some of these transition levels also. So make sure you're taking that into note. So key takeaway on this would be caution heading into the open. Just be patient, let the book clear. We may have a significant amount of post-OPEX positioning coming in with a lower total OI and liquidity. Again, may be extremely choppy and volatile. So again, smaller position sizes and smaller time frame heading into day, or possibly just even wait and let the structure kind of clean itself up, and then we'll get an overall better risk reward plan heading into tomorrow and the rest of the week. Moving on to the SPXP GEX ratio. We talked about this last week, that we saw some declining in the GEX ratio. This is a put call ratio, but we add a time component to it. So it's just short dated call gamma versus put gamma, and we see it rising. So obviously this still indicates that call speculators are maintaining control in the short term. But we were talking about price appreciation. If we saw a divergence and we saw the GEX ratio start to drop, then obviously we'd be a little bit more cautious and a little bit more risk off. But you can see this noisiness component really starting to come in here as we headed into OPEX also, and we reference that. And then we'll continue to watch this day over day. Obviously, this is, again, being above one, call speculators are maintaining significant control, and an overall pullback within a bullish uptrend towards one is not out of the realm of possibilities. SPX, this is just the overall full structure of the SPX, not separated SPXP, SPXA. And you see the GEX ratio continue to drop here, obviously indicating short dated call gamma, leaving the overall structure, or short dated put gamma increasing. Again, we talked about that price appreciation with the divergence in the GEX ratio. So again, we could see either one of two things happen. The GEX ratio starts turning back up to the upside, or the overall spot price starts coming back down to meet the overall GEX ratio divergence. Again, above one, so call speculators are maintaining control, so nothing really to get too excited about. Again, just short-term possible short-term pullback within an overall longer-term bullish uptrend. Delta balance for the SPXP heading into today. This is where we separate the two planes and give us an overall structure look. I talked about this last week, this out-of-the-money call speculation waning, even though the left-hand plane red, the in-the-money calls were sitting tight heading into OPEX. So now we're kind of getting a little overall push below the zero line on the right-hand plane. So again, out of the money call speculation losing control. But now we're also seeing a slight drop in the left-hand plane, so indicating the in-the-money call speculators below spot price may be taking some profit, and our delta balance is coming down. Now, projection on out in time, we do recover pretty quickly. But again, we're just watching that short-term weakness I spoke about last week. Even though we had significant price appreciation on Friday, we're obviously seeing weakness heading into today. So we'll continue to keep that on our radar. Moving on to the SPY for the delta balance. Again, referenced this last week that we were seeing out of the money call speculation wane via that right-hand plane. Left-hand plane was staying pat heading into OPEX. Now post OPEX, we're seeing a little bit more weakness heading down below the zero line. SPY is kind of interesting. We do see a quick recovery, but then we see a significant drop back down below zero. So again, this weakness, this is projected on out in time, not a crystal ball, just we're looking at the positioning of expiries. So we'll continue to watch this to see if we see, observe if we see weakness continue below the zero line for the SPY heading in for the rest of the week. QQQ, kind of the same look we discussed obviously last week. So same trading plan there. We're seeing more weakness come in, right-hand plane, left-hand plane, delta balance. And then we see it go all the way down towards -1 for expiries on out in time. And then we start seeing the recovery here, trying to get back above zero line. So again, we'll continue to watch this day over day. This is, again, not a crystal ball, but just a projection of what is occurring with the overall positioning and expiries on out in time. SPXP net stack command, this is our highest sensitivity levels heading into the open. We've forced spot price at 58.93, so we'll have to continue to watch that to see if that's our projected open. We see in the money calls below us. Obviously, this strike is significantly below where we would open, but this just indicating that in the money calls below spot price are still in control. And then we see that right-hand plane strike. I think we've talked about that 59.50, 59.55. Pretty important to the upside if we do take back 5,900 in the transitions. And then we see that net gamma sitting there at 59.10 and 58.90 for out of the money puts. So key takeaway on Charm is we have out of the money calls overhead that will continue to grow throughout the day. This will be a headwind or causing a force pushing us down. Obviously 59.50 is that level. We'll watch and run the new net stack command at the open. And then we have out of the money puts. These are charming their way also and giving us 58.25 to the downside. So we'll continue to watch that also heading into the open. So let's move on to our trading view chart and kind of our thesis. I think we've kind of already went over that. So outline the levels heading into today. 58.90-ish is where our projected open is at. You see in trans and negative GEX. This again is our full complex for our trading view overlay. And then we had the bottom of the drunken sailor range. So we've came up and tested this a couple times pre-market. This is going to be a large level of in trans, negative GEX, 5,900, large Livermore round level, as well as the bottom of DS. So I'm just going to put a big target right here. If we're below this area at the open, this would be kind of the first area I'd look for some stalling and rejection. And if we do get rejected in here, we have some sort of flag and then we see some breakdown, then that would be an opportunity to short at the open for a small move, possible back down towards 58.80. If we lose that area, I'd be looking down towards 58.50. If we take back in trans, in GEX, 5,900, bottom of DS, then you could have a short quick trade up towards 59.25, 59.30. Again, risk reward here is really small, so this may be very choppy, maybe a difficult trade, probably one that I'm not going to look to participate in. I'd rather for us to take back those transition levels and zero GEX, 59.25, 59.30. The transition levels on the zero DTE also, that would be my better risk reward trade to the upside towards 59.50. And then if we got through 59.50, we look for this transition area to the upside at 59.75 and 59.80. Again, this drunken sailor range, this may be extremely choppy, trapped between these two overall transition areas. or if we're under this drunken sailor range and really trying to push up towards 5,900 or 5,910, this may be difficult also. So a couple theses heading into the open. I'm going to be very patient today. Watch MTM, and as long as that maintains its bullish overall structure, I think we could obviously take back these areas and push back to the upside. But we'll also be watching vol-am intraday, those slopes to indicate if market participants are speculating to the upside, speculating to the downside, or if we're in some sort of consolidation state. So hopefully that helps everybody heading in the morning. Let's make it a great Monday, and we'll see you in the Discord in a few minutes. Thanks.